Cementing the future. Why Bamburi is so bullish about the cement industry here in the region. Good evening, many thanks for joining us. This is The Trading Bell. My name is O'Brien Kimani. We are coming to you from the NSE, or if you like, it's the Nairobi Securities Exchange. Later on, I'll be talking to the head of research at Genghis Capital, Elizabeth Wangeshi. We'll be looking at how the market has performed in the face of the Supreme Court hearings. But for now, we talk to the CEO of Bamburi Cement as we try to find out what is the market saying and what is the future of the cement industry in Kenya. Mr. Bruno.
Good evening.
Good evening to you. Thank you very much indeed for joining us on the Trading Bell.
Nice to meet you.
Please.
Thank you.
Very good. Well, you have been around since 2014.
Yes.
What do you make of the Kenyan cement industry?
That's a difficult question.
Not to you.
I would say there has been a lot of change in the past years, in the past 3 years, but even before. We moved from two or three competitors 10 years ago to 8 competitors. So the competitive landscape has changed dramatically. Competition has intensified. New players have emerged. And Bamburi has succeeded to keep a strong position in this industry.
But for how long?
For how long? You know, we are a company which is 60 years old. So my ambition is for the 60 coming years, we keep this position.
Well, I want to hear from you. In the last 10 years, when you scan the market, what would you say has been a game changer in the market?
In fact, the main game changer have been the customer expectation. We have moved from customers who were maybe not demanding enough about the product quality, about the product, the services that we were able to bring. And now customers are much more demanding, you know, whether it is customers like you and me, what we call the individual home builders, or contractors. They are coming with expectations, with requirements that are totally different from what it was 10 years ago, you know. Sometimes they request a specific product which is matching their needs, not the usual product that we are producing, but something which is specific to them. It was the case of SGR, for instance, when we were obliged to change our production to meet the requirements of the customer. And when we said it's a product that we don't manufacture, they said, fine, I will look somewhere else. So we had to change our standards, our practices to cope with this requirement. So for me, the main game changer is the customer.
The customer. And last year, you managed to raise your profit by about 8%. And there are indications that the real estate market has reached a saturation level with all players in the industry concurring with the same. Where do you see growth coming up next?
I would say we have succeeded to improve our profitability last year by working on the two components, the revenue side and the cost side. We have had extensive actions to reduce and master our cost, our production cost. It's an endless journey, but we made significant progress. On the revenue side, despite competition, I would say the the key success factor is differentiation. How can we propose something that our competitors are not? And we took several actions, several initiatives to differentiate from the rest of the competition. Few examples. You may have seen in the traffic jams in Nairobi a small truck with Bamburi on it, painted on it, which we call the mobile lab. Usually a laboratory is not mobile, it's in the building, whereas we put for the first time in Kenya a mobile lab which is going on the job site and helping the customer while he is using our products to make sure that he is producing its concrete as per standards, as per requirements. This has been a major breakthrough that we brought to this market. Another one, we provided that I would say it can be called revolutionary if I can. We are providing medical cover to our retailers when we discovered that only 1/3 are benefiting of a medical coverage. So two different examples, one on the quality side, for which I think Bamburi is rightly renowned, but also something on the customer side, a need which was not expressed, a solution that was never put in place in the country. So it is all this range of services, of solutions that will make the differentiation.
Good. So what I'm getting from you is you're banking on, number one, innovation, and number two, improving your customer experience and diversification.
Absolutely.
You have also announced plans to expand your production or to increase your output by about 1 million tons.
In Kenya.
In Kenya, that is.
We have also announced the capacity increase in Uganda. As you know, we are
We'll be coming to Uganda. Let's first of all stick with the Kenyan case. Why is this the case? Why do you want to increase when the SGA is almost getting to home stretch and the demand for cement has somehow eased?
First of all, we are investing because we do believe in the country and in the growth of the country. Then if you look at the fundamentals which are driving the growth of cement consumption, they are all there. First of all, the consumption today per annum and per capita, per person, is rather small compared to many other countries. We are at a higher level than neighboring countries, but we are still far below other countries.
The global standard.
We are consuming around 120 kilos per annum and per person. Some countries are consuming 500 kilos, even more. So the starting point is higher than it was 5 years ago, but it's still quite low. Second point, the need for infrastructure. We are all aware that there are huge projects, whether it is roads, port, railways, so there is a big need. Third element, the deficit of housing, which is critical, and the fact that the population is growing, and when the population is growing, you need schools, hospitals. So we are anticipating that the consumption will continue to grow, not in a linear manner, but there is a significant, I would say, not hope, but confidence that the market will continue to grow close to double-digit per year.
And you are indeed the biggest cement producer, not only in Kenya, but in the region. And also you own a significant stake in one of the other major producers of cement, that is the East African Portland Cement. There has been talk of new players coming in, especially with Nigerian billionaire Dangote. Do you think this market can still accommodate more players?
First of all, I welcome competition. I'm not afraid, we are not afraid of competition. Sometimes competition drives progress, you know. It's not sometime when you are not challenged that you can innovate. So I see competition as a lever for innovation. Then we are preparing to increase competition, but the competition has already increased. I was mentioning the strong increase of number of players in the past years. This Nigerian competitor would be another one, but the list is already quite long. So the best way to be prepared is to satisfy the customers, to build trust and confidence with customers, to offer them solutions that your competitors are not offering, to listen to them, to serve them. So this is why now this priority, I think, is the first one for Bambury. Let's put aside safety, which is above everything, but the customer satisfaction is the key for being successful when someone is coming, even if it is from Nigeria.
Do you have any plans to venture into any other country apart from the countries that you're operating in? There were plans for you to go to South Sudan. Is it still a lucrative market for you?
I would say that our ambition is first to strengthen where we are. You know, we are in Kenya and in Uganda. These two countries have strong prospects for growth. We need to cope with the growth before thinking of other countries. And I would say among our neighboring countries, South Sudan is having some difficulties that we hope they will solve, but it's not attracting in these conditions, I would say. So our strategy is first and foremost to consolidate, to reinforce where we are.
And with the entrance of new players, we haven't seen the cost of cement coming down. Actually, we have seen it increase by about 13% in the last 5 years. Do we expect the cost of cement to come down, bearing in mind that the government has also been very active in trying to bring down the cost of energy, which has been a significant component in the costing?
You know, regarding the cost of energy, if I compare its cost now with the cost when I arrived, I don't see that much decrease. There was a peak which was mid-14, but the price today of energy, of electricity, is comparable to what it was early 2014. So the cost of factors are there. And when you say that the price of cement has not been decreasing, I think that data should be better shared because...
Well, I have shared.
The price of cement, in fact, has been reasonably stable, but has not followed the inflation, for instance. If you think of current shilling, the price has not evolved that much, which means that every year the inflation has been absorbed by the cement price. So we can observe the trend that steadily the price is decreasing, in fact.
Well, it has remained, well, there has been an upward trajectory as, you know, demand increases vis-a-vis a supply constraint. But that notwithstanding, because we have to come to the end, going forward for Bamburi Company as a company, do you think, or do you see Kenya still remaining your biggest market?
If we were not optimistic about Kenya, we would not have invested recently a significant amount in one of our 2 plants. We are calling this project phase 1 of capacity increase, and recently someone was asking me, but what do you mean by phase 1? And my answer was that there will be a phase 2
coming.
So, and a phase 2 of a more important significance in terms of amount. It's too early to talk about it, but we have already invested 30 million euros plus in our plant in Athi River, and it is only phase 1. So we are confident in the country, otherwise we would not invest.
Good. Bruno, thank you very much indeed
Thank
for
you.
joining us on Trading Bell.
Thank you.
Many thanks indeed. Bruno Pashu is the Chief Executive Officer, Bamburi Cement, joining us here on the Trading Bell. You're watching us. We're coming to you from the trading floor of Nairobi Securities Exchange. Stay right here. Elizabeth Wangeshi is the head of research at Genghis Capital, joining us here now. Wangeshi, thank you very, very much indeed. The market has definitely defied market expectations and analyst expectations, you know, to boost some very nice figures. The question is, with the Supreme Court decision expected tomorrow, do we expect the market to change dramatically?
Well, thank you for hosting me. I think from this week's participation, we've seen a lot of interest, both from the foreign desk and also from the local desk. And I would say that this is irregardless of tomorrow's ruling. So the confidence is still there in terms of the market anticipation of some counters being discounted even at this moment. So we would expect maybe tomorrow's session, during the trading session, to be a bit quiet, but we expect the confidence to be still up for most of the companies. Yes.
At this point, we do not know what you know, the Supreme Court ruling will look like. But for example, if they were to uphold the election, what would happen for the market?
Well, in our view, is the market will still remain intact. One is from what we saw in the beginning of this month. We saw increased activities before the elections and even after the elections. We noted that most investors were actually confident that the market is still ripe for investing, and the fact that most counters were highly lowly priced and highly discounted, then that offered opportunities. So our view is that investors will still look at it that way. Yes.
What about if the Supreme Court was to say that we need to go back to the polls again?
Well, that definitely boosts, it's the same sentiment. There's a change, there's a notion that has changed amongst investors. So it's not only looking at the political environment, because we don't expect to see war coming from this. So we wouldn't expect to see a really bad slide in the market. Yes.
And of course, we have seen the market, I mean the counters, especially the selling counters, you know, being very, very active. Who is selling and who is buying?
Well, it's different based on different companies. We've seen interest in some banking companies, on tier 2 banking companies. We've also seen Safaricom, for instance, in today's session, most investors are actually selling. But basically this is driven by corporate news in the company. So that varies based on what is happening in the company. Dividends closure for most companies is upcoming in the mid till 15th September. So we would expect to see much more corporate activity initiating the pricing. Yes.
And it's quite interesting that Kenya Airways has been included in the top movers segment, selling about 1.1 million shares. Why are investors selling Kenya Airways shares?
Kenya Airways is more of a speculative counter with what is currently happening in terms of restructuring of their capital structure. So we'd expect to see investors actively participating in the company. There's no much information that has been given yet as to how they'll do their stuff in this year. So we'd expect to see them announcing whether there'll be an offer, still an offer to investors, or if they've succeeded in the capital restructuring, because they had that in the court case with the banks. So that's around it. The restructuring will still take time. So it's more of a speculative company. Yeah, and that's why we are probably seeing much more activity on the counter. Yeah.
And when you look at the NSE 20 share index, somehow weakening by some significant, not actually significant, but very small margins, from 4,052 points to 4,000 and this week to 4,000 from 4,027 points. What has actually contributed to this?
Mostly it's from the blue chip companies. Safaricom accounts for over 40% of the market cap. So this has effectively now translated to the index, all the NSE 20 index moving up. And again, when you look at the top movers, most of them are amongst the top NSE 20, the likes of Equity, East Africa Breweries. So with that, in the March participation in those counters, that's why we've seen that movement in the index. Yes.
Is this a time to buy or to exit the market?
It depends again on how you've invested in the companies. Selectively, some companies would be the right time to sell, and definitely there are also other companies that offer a good entry position for investors.
Wangeshi, thank you very much indeed for your time.
Thank you very much.
Elizabeth Wangeshi is the head of research at Genghis Capital, joining us here on the Trading Bell. Well, you don't need to go anywhere. We're back shortly.
My name is Joe Mushiri. My question is, should I be investing in a hedge fund? And what is a hedge fund?
Thank you, Joe, for your question. Hedge funds are alternative investments that employ different strategies when investing the pooled funds. In Kenya, the hedge fund is still not regulated. It's still a market that hasn't yet grown. So for investment, you could probably invest in an offshore investment. So in Kenya currently, the law is still not in place onto how this regulation of the hedge fund can be taken place.
Well, and that's all for today. Many thanks indeed for your company. We look forward for the same next week. Same time right here on KBC Channel 1. My name is O'Brien Kimani. Our SMS line is 22162. And of course, always remember to start with the word BIZ, that is B-I-Z-N. And Facebook page is The Trading Bell TV Show. Twitter handle is at The Trading Bell, at O'Brien Kimani. That's my Twitter handle. And of course, our Instagram page is The Trading Bell. Well, that's all for now. Back to Broadcasting House.